Alrighty, we're live on both the YouTubes and the Twitches for a delayed Ramsey show, Aftershow. But let's get going. I'll put my links in the chat. And we'll get going here. Since it's delayed, decided not to do any songs today. So I know everybody be disappointed about that. Let's see. I think I changed the show number. Yep, 327, 726, 2022. Alrighty. Alrighty. Do 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 do. Live from Columbus, OH. It's the Ramsey Show After Show brought to you by D.H. Schumann. Thank you so much, D.H. Here we talk about the Ramsey Show YouTube chat, and the people in it, and all things financial, and whatever else I want to talk about. I'm your host, Coach Steve Money, certified Ramsey Solutions financial coach, and you can schedule a free consultation assessment with me at calendly.com/Coach Steve Money. Links at the top of the chat and in the video description below. You can email me about anything, anything, CoachSteveMoney@gmail.com. Instagram's Coach Steve Money, no spaces. If you'd like to donate to the channel so I can make it better, that would be paypal.me/Coach Steve Money. Alrighty. What up, Maddie Bags? Maddie Bags got some praise from Supervisor today, so that's excellent. Today's Ramsey Show hosts were, of course, Dave Ramsey and the Big Chair. It's not Friday yet. Dave's still working. And his co-host was our boy, George Camel. And here's where we go. Market report. Alright, as you can see, down, mostly led by the NASDAQ, 1.87%, followed by the S&P 500, second most down, 1.15%. Followed by the Dow Jones, 0.71 down, and 0.69 down was the Russell Small Cap Index. And let's see if we have some reasons. Let's see, in S&P 500, NASDAQ in sharply lower as U.S. stocks fall ahead of Fed decision, and they're going to decide, I guess, whether to do, it seems like, whether to do another 1 percentage point interest rate hike, or like go back to a 0.75%. So it looks like, yeah, that's all we got on this story. But that's on this story. But looks like that's about it. Let's see what we got. Alphabet was this afternoon, and that must have not been that great otherwise. Would have possibly, yeah, they were up 5.53%. Oh, that's the after hours. They were down 2.32% today, but they're up in after hours, and they probably, let's see. Their earnings report came out at noon, and it went down a bit, and then it shot up like crazy right when the after hours started. It looks like, yeah, right when the after hours trading started. I wonder why. Weird. And look at it, in this big drop just then, like just a minute ago. Interesting. I think that's computers doing that. Google earnings missed expectations, but let's see. Is it gonna say? But what? It's from Axios.com. But bottom doesn't fall out. Okay. Narrowly missed revenue and earnings expectations and earnings reported on Tuesday. Shares were up 2% in after-hours trading Tuesday, right? Okay. Alphabet's advertising revenue increased only 12% overall. That's still an increase. YouTube sales only rose 5% compared to 84% in the same period in 2021. 84% is a lot. Google Cloud lost $858 million during the quarter, while Microsoft's cloud services grew 40% this quarter. The company is also slowing its hiring, as a lot of tech firms are doing. What else we got? Oh yeah, we did that one. What else we got for? Let's see. Microsoft reported after hours. Right after the closing bell, they reported, and they finished today 2.68% down and up 5% in after hours trading. So that's good. So theirs probably was good. Let's see. Oh, Microsoft missed estimates as well. Cites exchange rates and deteriorating PC market. Okay. But for some reason they were up, now they're back down. Same as the other stock that we just looked at. What was that? Oh, Google. Oh no, yeah, Alphabet, which owns Google, right? So yeah, so tomorrow will be Meta Platforms, artist formerly known as Facebook, and Thursday is Apple and Amazon. So we'll see how they do. Let's check the full picture for the after hours trading, and it's negative. S&P down another 0.38%. NASDAQ down a little bit over 0.5%, and Dow down 0.43%. Alrighty, and let's see. Most followed single stocks on the Google. The most down was Amazon, 5.23%. The least down, the Apple, at 0.88%. See what the rest of the planet's doing there. Europe completely down. Asia mostly down. See what the dollar is doing. Dollar is, and on a down market like today, normally the US dollar seems to do pretty well, so we'll see. Dollar up against the euro, up against the Japanese yen, up against the British pound, love, up against the Canadian dollar, sorry, and also up against the Australian dollar-mate. So it's a clean sweep for the US dollar. And crypto, everything down. Let's see, some idiot in the Ramsey Show chat today said that half of the US jobs are minimum wage, and as you can see, I mean, this is 2020 numbers, so it could be a bit more than this, but it's not going to be 50. Let's see. 2019. Looking to see if there's like updated stats, but if it was 1.5% in 2020, it's not going to be 50% in 2022. So people like to type incorrect things in the YouTube chats. Boom, boom, boom. I am a meat kind of guy, Matty Bags. With the spaghetti, absolutely meatballs. Absolutely meatballs, dog. This from the Wall Street Journal. There's two puppies right there. What is this all about? Oh, in the New Mexico wilderness, a survivalist compound asks $30 million. Is this to 85 yak is included? I guess that's yaks, like more than one. Oh, and it doesn't say what it is. I guess it's for you to buy it, I guess. Survivalist Compound. So that's pretty cool, I guess. I can't see the article though, otherwise we could see more pictures and stuff of it. Did not know that ahead of time, sorry. This from Barron's.com. Fed rate surprise could be a problem for the stock market. Let's see if they say how. Fed meeting week and the market doesn't exactly know what's going to happen. Market doesn't exactly ever know what's going to happen. After last minute pivot in June and with recent economic data coming in mixed, the discussion among investors and economists is all about what the central bank's next move will be. Well, they're going to raise interest rates. We know that is probably just a matter of whether they're going to do 1% or 0.75%. Sorry, I had to scratch. The Federal Reserve continues to play catch up in its fight against inflation, and there's no doubt that interest rates are going higher, right? So what's the big deal? Whether it's over the 0.75 or a whole percentage point, doesn't seem like that's big a deal. That big a deal to me. All right, let's see. And can't read this one either. My goodness. New York Times again. Kraken, a U.S. crypto exchange, is suspected of violating sanctions. So that's not very good. I guess being sold in somewhere we have sanctions. Like Russia, maybe. Or somewhere else. This from CNBC. As you can see, stock up. Microsoft on the rosy guidance. That means they think they're going to do well for the next quarter. 3M will spin off its healthcare business into a new public company. The new business will focus on wound and oral care, healthcare, IT, and biopharma filtration, the material science company said in a release. They make a lot of tapes and such. Adhesives, etc. The announcement comes alongside 3M's second quarter earnings report. And how was it? They are up in after hours trading. They announced that today, Tuesday. Yeah. It'll spin off that. Let's see if it sells. Second quarter revenue fell nearly 3%. Net income dropped to $78 million from $1.5 billion a year earlier. After excluding that one-time charge, 3M earned $2.48 per share. Performance topped expectations. According to Refinitiv, analysts expect 3M to earn $2.42 per share on revenue of $8.58 billion. Alrighty. Shares of the company closed up 5% at 140.82. Oh, so they closed up there, and also they are up in after hours trading. So it's 5% up today, and then another 0.32% this evening in the after hours trading. This is also from CNBC. Generation Z is stashing away 14% of income for retirement, pretty close to 15% of gross income that Dave Ramsey recommends, more than older generations, the study shows. And millennials, don't know about millennials, but they do have, at last report, they have more cryptocurrency than stocks and mutual funds in their retirement plan. So wonder if a bunch of those cashed out of that. recently while the crypto was so far down. The average retirement savings rate for older generation, millennials, Gen X, and baby boomers is 12% of income. Okay, so that's all combined. 12% of income compared with 14% among Generation Zers. While overall confidence in being on track for retirement is down from a year ago due to inflation and market volatility, Gen Z has the highest share of savers who feel assured they're getting it right at 69%. I wonder how many percentage of Generation Z at all is saving. Let's see, that's 18, 20 to 25. ages 18 to 25-year-olds are the defined in the study. I don't know if that's exactly it for Generation Z, but close enough. 14% of average, according to new research from BlackRock. Same time, the total share of Americans who think they are on track with their retirement savings has fallen to 63% from 68% in 2021. Plan sponsors' confidence also is down. 58% say their employees are on the right path, compared with 63% last year. Input from 305 plan sponsors, 1,308 workplace savers, 1,300 independent savers, and 300 retirees make up this study. The message is out there that you're on your own, that you need to start saving early. Yeah, it doesn't hurt at all. You could do the baby steps. And if you start earlier, you're likely not to have any debt, and then you could not have any debt ever, and then you don't have to do step 2. So you could basically start right with step 3. Step 1 is save $1,000 for emergency fund, and step 2, of course, pay off debt. But you could, if you don't ever have any debt, you could skip that, and then you could just immediately start saving your full emergency fund, which is 3 to 6 months of your personal expenses. All right, don't need any more of that. Speaking of millennials average net worth more than doubled during the pandy. Here's what advisors say they should do next. Average net worth more than doubled during the pandy, jumping to 127.793 during the first quarter. So that means it was before the pandy, it must have been 63, like 6,400 almost. No, I mean 64,000, excuse me. The largest percentage of millennial assets is real estate, making up more than 1/3 of their wealth. Oh, I didn't think about that. So I guess they could have real estate holdings in their retirement. Experts suggest focusing on the other assets, such as building retirement plans and other long-term investments. Okay, well, I guess that just gave us the answer. This is the breakdown. Does it say? Oh, it doesn't say crypto anywhere in there. That might be included under other assets, maybe. Let's see if it mentions that specific. Diversification, name of the game. All right, it doesn't say anything specific about that. All right, but their average net worth is up, so that's a good thing. And we go to reddit.com/r/Dave Ramsey. We sort by new. All right, this from Bebop and Rocksteady. This from What Would Dave Do Flare. And again, they pick this flare. They don't have to select a flare, but a lot of times they do the WWDD, what would Dave do? And then they say, now I don't follow Dave's advice specifically, but I'm just wondering what you guys do. Let's see, read some Ramsey's solutions, articles, and listened to Dave's discussions on employee ESPP. Is that from another country or is that like a military ESPP? What is that? Employee stock purchase plan. Okay. All right. Employee stock purchase plan. Right. He doesn't recommend even for your company. He doesn't recommend that even for Apple, as we found out yesterday on the show. He did say if he was ever gonna put money in one single stock, it would probably be Apple, but he doesn't recommend that, so he would never do that. But regardless, so he says when you have this chance, when you're given the stock, that you should still sell it as soon as they will let you. And not to buy it. Yeah, understand the recommendation is not to invest in employee stock purchase plans, right? As in not really providing anything at a discount and not to invest in a single stock. Exactly. However, I'm in a unique situation, so I am an exception. False. My employer offers a buy one, get one. Okay, that's still, you have to hand out them money. So even if it's buy one, get one, if the stock isn't worth that much and it's not going to be worth that much, you're not doing anything really. And if it goes down, you're actually losing money. So, would it be a one-off situation where it be recommended while also investing in other index stocks? There are no index stocks, they're index funds. Index funds, not stocks. So, thanks in advance to those who provide some insight. Nobody commented yet. This must have just been, from 5 minutes ago. All right. So, yeah, basically, if it's free, you take it and then you sell it as soon as you can and you get mutual funds with it. But as far as you having to dole out money for it, rather than being your single stock, you're better off buying a mutual fund with that money. Because you do not know what your employer's single stock is going to do, and you're not going to be diversified enough by just investing in that. Even if you do an index fund along with it, that's not going to be something he would recommend. Does Dave Ramsey drink alcohol? I have no idea. Financially unwise vice? I'm sure he would if it's a vice. But as far as I don't know that he's ever addressed that at all. Obviously, if you have an alcohol and drinking problem, obviously, I would think he would be against that, but I do not know. Yeah, he has not addressed it that I know of. Home sale proceeds, scenarios, help, fun. All right, going to be a lot of financial theory in here probably. Let's see what we got. We'll try to keep this short as possible. Oh, I didn't do that bad. Baby step 2 and 4. That's not how it works. Not how it works. You do steps 1, 2, and 3 separately, and then you go to 4, 5, and 6 all at the same time. You're doing it wrong. Who's that? Gralamat 77. Let's see. Recently sold our home and will net $115,000 after closing realtor fees. We already have a new home, a new manufactured home on 68 acres in South Carolina. Household income $140K pre-tax. 35 male, 32-year-old wife, 3-year-old, and a baby boy on the way. Congratulations. Retirement savings, $130K. New mortgages, $247. Land loan, 48 acres are financed separately from the 20 with the house. Okay. $122K. Land loan is $120K. Okay, $247 house. And the land loan is $122K. Wife car loan, beep, beep, boo, doo. Yep, you should be doing that and not investing at the same time. But you can take care of that immediately with your 115, so that can be gone in any other debt you have. Grew up in a rural farm setting, fished, hunted, etc. all my life. None of that matters. So we escaped the cookie cutter neighborhood life and are pocketing a good bit of cash, and I'm looking for what to do with it. I know what Dave Ramsey would tell me to do with it, but I don't adhere strictly to those principles. Then why are you asking in a Dave Ramsey forum? Weird. So weird. Well, if he knows, I mean, he did not say what would Dave do, so I guess it's all right. But let's see what's going on. Tractor for being able to manage said land, upwards of 35K. Yeah. So, I mean, you can buy that. Or you could put that towards your new mortgage if you don't already have it. So they already have the new home. So they probably do already have that mortgage, even though the other house isn't closed. So hopefully that house will continue to close on time. Let's see, back fishing, saltwater life, 50K for used with the, oh, what is that? Oh, I always had a boat. Sold it when I got married, we always wanted to. Oh, I see, tractor, upwards of 35K, a boat, 50,000, shed, 19.5, carport with a bag. What is that? Okay, so cash already. Advice appreciated on smart ideas that don't necessarily involve paying off a 120K piece of property and pushing all other goals, dreams. Yeah, I mean, that's what it's going to be. That's what it would be because, I mean, you've got you're still investing, and Dave wouldn't advise that. You have your home, so after you get 115, you want to go ahead and sell it for toys. Other than the tractor, if you're going to be farming that land yourself and not just messing around, if you're going to be farming it, like for being able to manage it, does that mean like whenever you feel like doing anything, like once a month or something like that? Not worth it. Not worth it. So, yeah, like in a carport, you don't need a carport either. You can walk from to your house in the rain. It'll be fine. Trust me. But, yeah, person's not interested in hearing about this. He knows what Dave would tell him. He said. Alrighty, job income issues. Need advice. This from 049AT. Recently switched jobs out of desperation due to significant stress and work-life balance issues with my previous position. But now I'm making 10K less than I did previously, and I'm struggling with my budget. I now typically have around $800 per month that I'm able to save or spend after all my mandatory budget items, including some retirement savings, are paid. If you have debt, you shouldn't be doing retirement savings. Have no room to cut expenses. I think this amount is not enough to cover my future goals and any upcoming emergency expenses. Should have an emergency fund. Maybe follow the baby steps. Just a suggestion. Follow the baby steps. Since I recently switched jobs, should I stay at this job for at least a year and then look for a high-paying position? You can look for a higher-paying position now. Why not? Or do I need to do something more urgently? You probably just need to change what you're doing with money, and you need to struggling with budget. That means you're trying not to cut stuff. So cut stupid stuff. Get that out of there. Boom, boom, boom. And save or spend, that's not a thing. So if you have debt, that should be addressed first before saving more than $1,000 for your starter emergency fund. I would do the baby steps. But you can, keep working. You can get a second job instead of a higher paying job if you want to stay at your current position longer so it doesn't look like you're just job hopping. Also considering a career change, didn't you just do that? And not sure if I should keep this job. It's stable and low stress while studying, training. Yeah, well, that part's going to be up to you, but I would say do the baby steps. What up, Spring? What up, Sid? Do fees on investment account matter? That's from VSOGD. 5.75 front load fee. That's a little up there. That's a little high. Plus expense ratio seems borderline criminal when a Vanguard fund. I knew it was going to be Vanguard because he had the V right there. I just had a feeling that has something to do with it. The V in the username right there. Fund has expense ratio of less than 0.2%. Yeah. Let's see. I just don't understand how Dave can recommend a fund with a fee this high. Well, I'm going to go ahead and guess that even with those fees taken out, I'm going to guess the track record for that mutual fund means it makes more than whatever crap you're buying for 0.2% from Vanguard. So, but the beautiful thing is you don't have to buy what he suggests. So, but I would imagine that that's what the dealio is. Dave says 40% of managed mutual funds do beat the index. And I'm sure some of them beat them quite handily. And so, I mean, with a 5% front load fee, that is kind of high. So I don't know what specifically that is, or if he says that in there. Let's take a look from the man himself. When is this? 2021. Whoops. Yeah. Boom. Load sales commission. Front end. So if you invest in $1,000 in a mutual fund that has a 5.75 front end load, you'll pay an upfront fee of $57.50, and your initial investment will be reduced to $942.50. All right. I mean, that could be just an example. I don't remember seeing any front end load of that. I mean, that might just be because I'm not invested in any of those, and you of course don't have to be. But what he was doing here was explaining front end load. So there's a back end load, also the no load, which I think all of mine might be no loads. I don't remember. I will check in the morning when I check my daily total for fantasy mutual funds. We'll see. Advisor fees, expense ratios, right. So, and some of these, even if you subtract out all this stuff, some of them still beat the index. So it's up to you to find them, or you can just lazily do the index fund. It is up to you. It is your money. Baby step one still matters. CWA 1921. To those of you who are new to the plan or working to save your start at EF or grinding on baby step 2, I wanted to emphasize the importance of baby step 1. While 1K may not sound like a significant amount, it does matter, and it's not a matter of if an emergency will pop up. Generally, my wife and I never had to pull from our emergency fund at the time that we were paying off debt. We never had to do that. So, and I believe at least one, I think Kelly as well from the Ramsey Show chat said that as well, that her family did not have to ever pull from the emergency fund while they were paying off debt. Recently the air conditioning went out overnight. That'll happen because it's hot. Home here in Florida, yep. 100 degrees Fahrenheit for several straight days, yep. Next morning, we picked up the phone and called a service company who came out, assessed the situation, advised we needed to replace several parts, which totaled a little over 1K. About an hour later, we had cool air and 2 happy kids again. For us, this was a small inconvenience, and that's what emergency fund does for you. It turns an emergency into a small inconvenience. Because we planned ahead. Note, we have moved well beyond baby step 1 through 3 at this point. Okay, great. The point in this is you don't overlook baby step 1. If we didn't have the 1K, it would have been, it's would have been, not would have been. The contraction is would have with a apostrophe VE, would have, but not would have been punch in the gut, would have been a punch to the gut. to our momentum to getting out of debt. Yeah, that's why it's there, to stop you from just like putting that on a card and you have the money. We would, again, we would have probably needed to do payments or put the bill on a credit card. There we go. So stick to the plan, stay focused, and make sure you have your starter emergency fund in place before tackling debt. That's good advice. Bad English, but still good advice. Matt Daniels, what up? Thanks for the he's a great show. I assume I'm not farmhouse shopping with dogs. Perhaps he's farmhouse shopping with dogs. Let's see, is there any things rich people won't tell you? Just something from the Facebook. Oh, one day ago, did we do this one? No, it doesn't look like it. Alright, let's go through these two. Ramsey people, this is just event request for encouragement, so if you're not into that, no worries. Baby steps 4, 5, and 6 has side hustle regret. Took on an online tutoring side hustle at the end of June. It pays pretty well, but it does require administrative work that isn't paid, and that makes it equate about 22 an hour. 22 an hour, a lot of people would love to have 22 an hour, which I realize is decent for an online at-home gig. It's decent for a lot of gigs. I've been working about 15 hours a week since I started. It takes up my entire evening, Tuesday through Thursday. 22 hours worth it. I landed a new role in a completely different industry that I started on August 1st. I've been able to balance my current job with the side hustle so far, but I'm anxious about how it will fit into my new routine. It will fit however you make it fit in there. I mean, if you don't have time with it, if you're working, like I have to work extra, I have to work overtime in your different industry now, then you don't have to continue with that. 6 months pregnant and took on the side hustle to try to, so that's gonna have, yep, that's gonna try to make a bit of extra cash because my maternity leave is gonna be unpaid to this shift in main jobs. Okay, told myself I could quit on November 1st, but I'm already over it. I could probably make like 4K after tax in that amount of time if I could stick with it, which covers an entire month. It's just a season. Hashtag season. I don't know how people grind out their 60-hour weeks for extended periods of time. It's because they want to further down the baby steps. You're in 4, 5, and 6. You're not required to get a part-time job for that. You don't have to. It's just going to delay when you're done with step 5 and step 6. So that's the whole dealio on that. But you're still just ... tired. Very, very dramatic right there. But, you know, you're pregnant. So, I mean, I've never been pregnant. I'm sure it's not great. So, I mean, if that's taking it out of you, you're allowed to quit whenever you want to. I'm sure grinding out 60-hour weeks, I've done it, is easier if you're not pregnant. I've never been pregnant, so I don't know, but I have been old working 60-hour weeks, and you just want to further yourself along the baby steps. So we wanted to save a full 10K on top of our emergency fund so we could just relax while I'm out of work. We won't get there if I don't stick with it. Oh, okay. So you had that goal, so maybe you get to decide. You get to decide if you want that. Yeah, encouragement, please tell me a good story how grateful you are about a short-term sacrifice you made. Yeah. Yeah, great. I'm glad that I worked 60-hour weeks. Absolutely. It's interesting though because all this says I, and then down here it's finally we. It's finally we down there. So I mean, what's the husband/boyfriend doing? Or is this the royal we and she still just means herself and gonna be a single parent? So we don't know that, but like I said, I'm sure being pregnant will take it out of you. And on step 4, 5, and 6, you're allowed to not be gazelle. So that is up to you. You should talk with your significant other about it. Let's see, we did that one. Oh, did I not? Did I skip? Oh, I skipped this. Let's talk about this from Volvo Tanks. Just paid off the house today, officially debt-free. Journey started 4 years ago with $250 left on the house and $35 in debt from credit cards and cards. Today we have our full income and can't be happier. It can work. Absolutely it can. Congratulations so much. Alrighty, I'll give the plugs again. They are at the top of the chat and the video description below and the right side of my YouTube banner. And again, I'm Steve Simpson. I am also known as Coach Steve Money. I'm a certified Ramsey Solutions financial coach. And if you've got money problems or just want to make sure you're on the right track, you can click on the link, click financial coaching, and it'll pop up the calendar right here, and you can select the day, select the time, and Calendly will let me know when you want that appointment, and I will email you back and let you know what information I need from you in order to accurately financially assess you. PayPal for donations, and that's paypal.me/CoachSteveMoney. Instagram, Coach Steve Money, no spaces. And you can also email me about anything. Yes, anything. CoachSteveMoney@gmail.com. You can email me about anything about the financial stuff, the Ramsey Show stuff, about financial coaching, about scheduling, about Oak Island, about video games, about computer stuff. I've got 25 plus years as a PC tech. Or if you want to sing the Baby Step song, which I did not do today, but I could have played your recording of it. If you send me a recording, I will play it on here. Or we can also have you do it live like I do it when I do sing it, which is pretty much every single time, except for this one. Maybe I didn't sing it one other time. Maybe. Seems like I've sung it every time since I have written it, but we were a little bit delayed today, and now we're going over past 7 o'clock, so I will end it here. Thank you so much for watching. Please like, subscribe, and comment, and make smart financial decisions every day.